Yo, what is going on, guys? Welcome back to a new video. Inside of today's video, I'm going to be showing you guys step by step exactly how I managed to accumulate $150,000 in funded capital in just under 2 weeks. And this wasn't just one singular 150k account. This was three separate occasions, three singular $50,000 accounts within that small 2 week period. So what we're going to be going ahead and doing is reviewing sort of like the past 2 weeks price action, breaking down the trades that I had taken, and showing you guys my simple step-by-step process that I use to approach the markets every single day. Just for reference, it isn't just me that's taking these trades, it is also my mentorship students that are absolutely smashing it at the moment. And this just goes to show that if they can do it, then there's no reason why you can't as well. So without wasting any more time, let's go ahead and jump straight into the charts. Alright, so here's the trade that I took on Wednesday, the 26th of November. Let's go ahead and break this down step by step. So remember, you always want to start on the daily chart, and you always want to be looking at three closely correlated assets, okay? If you guys haven't already, I'd recommend to go check out my previous video, the one that sort of breaks down my actual whole entire trader model and step-by-step process in a nice formatted video, okay? But, you know, either way, you guys know we start on the daily chart, we go ahead and find our narrative through the candle closures and through the higher time frame cracks and correlations, okay? So looking at this daily chart, what did the day prior do? Like, how did it close, right? So the trade was on Wednesday. So how did Tuesday close? And how could that have given us information on what to expect within Wednesday? So as you can see, Tuesday actually closed above Monday's high, right? So Tuesday closure above Monday's high. Do we have any draws on liquidity above us? Yes, we do. So we've got this daily swing high and also this daily swing high here. So those were my sort of draws on liquidity, okay? So coming into the day, step number one, candle closure. This is offering a continuation candle closure to the upside because Tuesday closed above Monday's high. So the first target coming into Wednesday will be that previous day high. But as you can see, that got taken pretty quickly. So then what do we do to know if we're going to continue higher or reverse? Is look for lower time frame cracks and correlations, either to the downside to anticipate, you know, a reversal potentially, or if we don't have any bearish cracks and correlations to the downside, and we only form bullish ones, and we're respecting the bullish ones, then we can expect price to continue higher and higher and higher, okay? Also, we had two clear draws on liquidity resting right above us as well, so it makes sense, you know, it would have just, you know, it wouldn't have been clean just to turn around here and just build up like three failure swings in a row, right? So, yeah, that's sort of like how I got to the narrative of looking for higher prices towards these draws on liquidity up here. So, now what comes next? So, obviously that 9 to 10:30 window, we're looking for our TCIC model inside of it, right? So 15-minute time frame, let's see if we've got any daily cycle. Sometimes daily cycle will put in like the high and low of the day. So if we form one, you know, for example, during London, then maybe we can expect AM just to be that distribution to the upside. In Wednesday's case, you can see we actually didn't get any sequential SMT on the daily cycle. So what would then our next best thing be? Would be a 90-minute cycle, right? So now we're checking to see if we have any 90-minute cycle sequential SMT. As you can see, we don't have any during the 90-minute quarter that I trade, Q3. But what you can do is, because if Q2 manipulates, so the quarter prior to the one that I trade, if that one manipulates, then we can expect Q3, the one that I trade, to be that distribution, right? So 90-minute cycle, Q2 manipulated below Q1's lows. As you can see, indicator marking that out right there. All the stuff that you see on the charts is marked literally by my indicators. So if you do want to pick those up, link will be in the description down below. So you can see here, we've got a sequential SMT with ES running below Q1's low. NQ did not run below Q1's low, right? So there's our sequential SMT. We then, of course, need our TCISD to confirm that, which in this case was confirmed at 7:40 a.m., right? But during this time, we're not on the charts. But once we enter the charts at 9 o'clock, we're still looking back at the previous quarter to see what it has done, to see if we can anticipate manipulation within our quarter Q3 or not. So I didn't expect manipulation because Q2 had already manipulated, right? So coming into Q3, just looking for that distribution move to the upside towards my draws on liquidity. And also remember what I mentioned is once the previous day high has been hit, look for potential reversal signatures back to the downside, right? We had formed one, right? We got a bearish 90, we got a bearish TCISD. So what did I do? Simple, just waited for the TCISD to get disrespected, which in this case would be a closure above the closure of the TCISD candle. So we disrespected it at 9:15, And not only that, but also this candle here, 920, also traded above the sequential SMT high, I believe for ES as well. So that's what cancelled it out. Let's go ahead and take a look. So yeah, it was cancelled out there at 925. Hence why, we got that move higher at 930, and hence why we still continued higher for the day, because we'd formed the bearish SMT and the TCIST, but it got disrespected. So then that's when we'd expect the continuation higher, right? So, seeing all of this, all I now need is a TCIST model to get into a trade. We know that we can't get one on the 90-minute cycle because our TCIST is all the way down there, and we're not expecting those lows to get taken. So again, work our way down, process of elimination. We know we're not going to get down here, so what can we then use? The microcycle, right? And let's go ahead and take a look at the microcycle to see what formed. As you guys can see, if we're looking at YM ran below Q1 of the microcycle's low at 928. So right before 930, remember, manipulation prior to 930 equals 930 distribution most of the time, right? So the sequential SMT was formed off this candle, 928. So then our TCISD would technically be that one. However, in a bullish example, remember the TCISD candle has to be bearish. So we don't use this candle. We're looking for our most recent bearish one. So not this one, not this one, but this one, okay? Mark out the open. As you can see, in this case, it had already been confirmed instantly. Because the 928 candle had closed above the most recent bearish candle anyway, okay? So let's move this to the side. So as you can see, we'll go ahead and mark out the open. You can mark out the candle body as well. And all we're doing is just entering inside of that candle body, the TCIC. Where do we place our stop? On the failure swing low. So this is our failure swing low. This is the candle that created the failure swing when YM created the stop run, creating the sequential SMT. Go ahead and enter inside of it. I waited for a smaller rejection, so the RR was a little bit lower than what I had it marked out there. I didn't enter immediately because it was 930 as well. So waited for it to pull back, put in a small rejection wick, go ahead and take my entry, stop on the low, and then target the lower hanging fruit, which I believe was like London highs. Yeah, I targeted around London highs, and then I left a small runner as well after that, okay? So yeah, that was the trade that I took on Wednesday. So now let's go ahead and jump into another trade that I took. All right, so here's another trade that we took. This one was taken on Friday, the 21st of November. As you guys can see, a very, very clean and swift TP in 1, 2, 3 candles. You love to see it. These are the types of trades that I live for right here. But yeah, let's go ahead and break this one down. So again, pulling up the triad, to look for the cracks and correlations, to look for the model. And also, this was taken on Friday. So what do we do? Daily chart. How did Thursday close? Why could we expect to buy it on Friday? Okay. So in this case, this is a little bit of a different scenario, right? But it is one that I did mention about just a moment ago. So Thursday, looking at this closure mechanically, it was a continuation candle to the downside, right? So what is our almost guaranteed target for Friday is just that previous candle low, right? But remember what I said earlier, once that previous candle high or low is taken, then look for any potential reversal signatures on the lower time frame to hint towards potential higher prices or a continuation lower. In this case, it hinted at a reversal higher. And not only that as well, keep in mind of what day it was. It was Friday. So the weekly candle, Friday is the final day of the week. So it's most likely going to pull back up into the range, right? So we'd already delivered quite heavily to the downside. We'd hit this previous month's low as well, which is a significant liquidity pool, right? And then we got signatures on the lower time frame to hint towards higher prices, okay? So previous day low got taken. Then what happened on the lower time frame to show me that we could potentially be bullish? Hidden weekly cycle sequential SMT plus a 1 hour TCISD, okay? So it's hidden because YM did not close below the lowest closure of Thursday. Whereas if we take a look at NQ, you can see that we did. And we did that off the candle exactly 4 a.m. So that is our TCISD candle. A lot of people ask me about that as well, like which candle we use for hidden sequential SMT as a TCISD. Same concept. Which candle create the hidden? Mark out the open of that candle, wait for closure above, boom. Okay, so 4 a.m. close above there at 8 a.m. And then obviously we trade 9 to 10:30 a.m. So I took my long position inside of the 9 a.m. candle, which had traded back inside of the hourly TCISD. We've got a bullish hidden weekly cycle. And also we go to, I think it was a daily as well, potentially. Don't quote me on that. Let's go ahead and take a look. Yeah, a daily as well. So Q1, Q2, London there, putting in that daily cycle. So anticipating again the AM distribution to the upside. We'd also traded inside of this gap here as well, prior at 8 a.m. So everything did line up for higher prices. Okay, so what am I then doing? Looking for a lower time frame TCISD model, right? So let's go to the 5 minute, see if we had anything here. So as you can see, we'd formed this, but I'm not sure when this actually formed. This might have been before I took my entry. So it was at 9:45 actually, yeah. So I remember this one. So sequential SMT formed at 9:45 on the 90-minute cycle, which is this candle here for NQ. So the TCISD would become this bearish candle, right? But you can see we hadn't confirmed it before I actually took my entry. Like my TP got hit and then it got confirmed, right? So why did I enter here? Well, if we take a look at ES, right, 9:45 candle create the sequential SMT, and that one also closed above its most recent bearish candle for the TCISD on ES, right? So another little tip here for you guys is when you're looking at ES and NQ, as long as one of those two assets have formed the TCISD on its specific asset itself, so ES formed it, you can then enter long position, for example, on NQ. Okay, so if NQ had confirmed it, ES hadn't, that is still a sign that you can long ES as well. Okay, so I saw that and I was like, okay, so this got confirmed at 9:45, so I'm looking for an open low high close towards my drawn liquidity at 9:50 candle. So that's all I did. Wait for 5 minutes to open up low, trade into the previous 5 minutes range, take my position, stop, didn't quite go on the invalidation in this case because the RL was too bad, so slightly above the invalidation, but I was pretty confident it would deliver to my draw pretty quickly, hence why I did that. And then as you can see, it hit my TP nicely. But if we go to the 1 minute, I'm pretty sure there may have been something here on the 1 minute as well. I think there was a TCISD on the 1 minute also. Let's go ahead and take a look. So maybe not actually, maybe not. No, so no sequential SMT on the 1 minute time frame, but I did actually place this trade on the 1 minute time frame. And what I, essentially wait for here as like a signature to show me that we're ready to go higher on the 1 minute is just an inversion, right? So this 1 minute gap got inversed here at 9:48, and that was a candle that also closed here, confirming the TCISD. So then I waited for price to just open up low. It maybe could have traded inside the inversion, but I saw that we opened up low, then rejected, because you can see it was the 9:50 candle that I traded. So we'd already put in 1 wick there, another wick here. So now I'm thinking in my head, right, if we're going to expand to our draw, we should do it pretty quickly. There's no reason to go much lower than this. Took my entry, placed it below the inversion just in case we did come back to it. In this case we didn't. And then we pushed towards the drawn liquidity. And also this candle, once it had taken these accumulation highs, I did just move to break even. But as you can see, it hit the TP all in one candle anyway. So yeah, another super clean trade. This one was taken on the 21st of November. So now let's go ahead and jump into one more trade example using this exact super simple step-by-step process that myself and all of my mentorship students do follow. And also, if you guys do want to apply for the mentorship and be coached by me and be, one-to-one mentored by me every single day, help keep you accountable, allow yourself to take these type of trades like myself, the link to apply will be in the description down below. So yeah, go ahead and apply and see if you are the right fit and see if you want to elevate your trading. But with that being said, let's go ahead and jump into the final trade example of the video. All right, guys, so we are now jumping into the final trade breakdown recap of the video. As you guys can see, this trade actually looks pretty similar to the one that we had just taken. And this one was also taken the day prior to the one that we just went through as well. So this one was the 20th, Thursday, November. The one that we just spoke about was the 21st. So back-to-back winning days right there with pretty much the very similar looking setup. But yeah, as you can see, clear drawn liquidity, TCISD entry. But, before we jump into the actual entry model itself, let's go ahead and find the narrative as to why we actually end up taking a long today. So when I find my narrative for the day, until I see a clear invalidation of it, I will always take a trade in line with that, okay? So let's see how Wednesday closed and why I took a long on Thursday. So as you can see, Thursday actually ended up delivering very far to the downside, but we still managed to catch a W trade. And the reason for that is if we go ahead and take a look, how did Wednesday close, right? Wednesday closed, it wasn't quite above, I don't think. No, so it wasn't quite above Tuesday's high, but again, I don't trade candle closure like insanely mechanically. I use them to my advantage a lot, but I still, have some thought process behind it, right? So if we take a look at Wednesday's candle, it just barely wicked above Tuesday's high, technically given a reversal signature candle, right? But for me, whenever I see a reversal signature, I need to see a clear closure back into the range and also a somewhat decent sized wick, right? This candle shows me here that, we put in a high and we basically pull back within the final few minutes of the day. So to me, that doesn't indicate much of a reversal, okay? Then if we take a look as well at ES and YM, they both gave insight candles, which means what? It means that we can expect a pretty volatile upcoming day, either to one side or taking both sides of the range. And that's exactly what happened. We took the high and then we took the low, okay? So this inside candle here for ES and YM did exactly the job that it was supposed to do. But yeah, with that being said, the reason why, I was looking for longs of this candle as well is if we take a look between Tuesday and Wednesday, I believe we had a weekly cycle sequential SMT, if I'm not mistaken. Let me go ahead and take a look. Yeah, so yeah, there we go. As you can see, so Tuesday and Wednesday formed a weekly cycle sequential SMT. Our TCIC was confirmed as well on Wednesday at the same day, 3 p.m., right? So now I'm looking at Thursday, not just, using the candle closure mechanically because that offered a reversal signature, right? But the closure of it was still very, very high up. And also we had a cracking correlation to the upside and nothing to the downside, right? We did have one to the downside, but then it got disrespected pretty quickly at the end of Wednesday, okay? So weekly cycle Q2, Q3, expecting Q4 to be that distribution to the upside, okay? So now what we're doing is looking for the TCIC model inside that 9 to 10:30 window. So let's go ahead and see if we had any daily cycle on this day, anything like that. So yeah, as you can see as well, daily cycle Q1, Q2. We also had another one Q2, Q3. TCIC is forming and being respected very nicely. Now that is a very good indication that you are on the right side of the market. If the cracks and correlations are being respected, if the TCICs are being respected, all that stuff, the gaps as well, nice trade into this gap here. And then rejection away from it as well. Nice draw on liquidity above us as well, which I don't think actually got quite hit, but it doesn't matter if it doesn't get hit. As long as you trade in line with it, you don't always need to be correct. It has to be 100% of the time about the draw being actually hit, okay? So we trade inside this gap, London and also AM, sequential SMT, bullish week of the day prior, so expecting distribution to the upside today, okay? So now we're just looking for a lower time frame TCIC model. Was there a 90-minute? Don't think so. No, in this case, no 90-minute. So it must have been a micro, which we know it was. We sort of just looked at that before we went over the narrative first. So yeah, as you can see, Q1, Q2, sequential SMT from ES right here. So it was ES and NQ as well, actually. They both ran below Q and lows. As you can see as well, this was very, very messy. And I'll tell you exactly how I managed to avoid all of this chop here, okay? So which candle created this bullish sequential SMT? It's this one here, right? 9:30. So that's our TCIC candle. Look at the open of it, right? And another little tip for you guys. If you see price rejecting from a TCIC body, when you're expecting it to close above to go for longs, basically, that is a good indication that price is still very much so weak and is most likely going to trade lower first before trading back higher, okay? So you can see it rejected from the TCIC 1 time, 2 times, 3 times, 4, 5, 6, 7. And then finally within the 8th time it closed above it, right? And also after rejecting from it that 7th time, we ran lower, we took this accumulation low, so we took the liquidity that was building up initially, then we ran above it with clear strong displacement with a solid closure above, okay? But I then didn't just go ahead and enter as soon as we closed above. I then waited for a little bit more confirmation. In this case, was waiting on the new 5-minute candle open to see how he was going to open up, see if he was going to reject after opening up low, for example. As you can see, the 9:45 candle, which is the 5-minute candle that I traded, opened up low, which is good, but it inverts its gap to the downside. So what I said in my head, I was like, okay, well, I don't want to see that especially after accumulating and rejecting from here so many times. So all I did was wait for price to close back above that inversion, which it did here at 9:46. And then I'm like, okay, cool. Now I'm, ready to go long. This is price telling me that we are ready to go higher. So then I entered off the 9:47 candle, small open up low, placed my stop on the swing low down here. Not quite the invalidation because again the RO was too bad, and also in my head I'm thinking, well, we just inverted the gap back to the upside, so if we come back down below that gap, then my trade idea is probably wrong anyway. So yeah, great stop loss there, around about a 1.6 R. More or less on the lower RR side recently, because price has not really been offering too large of a move higher before, it usually takes the target and then comes back lower, chops up a little bit, but those are just the conditions. You've just got to adapt. You guys know me, I like to be in and out, just take the low hanging fruit, which is this clear draw over here. So yeah, just enter there, stop on the low, and then target again, like I said, the low hanging fruit, which was this high up here, okay? So yeah, that was pretty much the trades that I had taken on the week or the past couple of weeks. Probably taken a couple more, but you know, 3 super in detail, step-by-step, simple process trades that I take every single day. And this is what I do every single day inside of my Discord, and also teach my mentorship students to do exactly the same thing as well. So if you guys do want to apply to become a student of mine and learn how to take these trades every single day, then first line in the description, go ahead, apply for the mentorship, fill out the form, see if you guys are the right fit. If you are, then you'll be called up and we'll hop onto a call with myself and we'll break everything down for you guys, okay? So yeah, with that being said, don't forget to also check out my socials in the description down below, my free Discord community, and also the indicators both used inside of this video here. And yeah, with that being said, enjoy the rest of your days and good luck trading, guys. Peace out.